A few weeks ago, I opened my banking app to make a routine payment. Before I could do anything, a prompt appeared asking me to update my annual income so the bank could better serve my needs. My previous income was already filled in, and there was a convenient little box waiting for my updated number. Better serve my needs. That's the exact phrase they used. I closed it immediately without entering a single digit because I understand precisely why they're asking, and customer service has nothing to do with it. Here's what most people genuinely don't know. When you hand a bank your income information, you're essentially giving them tools to make financial decisions about you, decisions engineered to benefit their bottom line, not yours. Every time you update that income field, algorithms activate instantly. Your customer profile gets recalibrated in ways you'll never directly see, but will absolutely experience over time. Financial institutions have successfully conditioned us to treat income disclosure as routine, even mandatory. They tuck income questions into applications right alongside your phone number and address, as if they belong in the same category. They send friendly update requests dressed up as customer care. The whole process feels so standard that most people never stop to ask the most important question: why do they actually want this number? Let's start with something most people find genuinely surprising. Banks are not legally required to collect your income in most situations. There's no federal law forcing credit card companies to know your salary. No regulation mandates that your bank maintain current income information in your file. They ask because the information is enormously valuable to them. Knowing your income helps them profit from you more efficiently. Full stop. This distinction matters more than it might seem. When something is legally required, you must provide it. When something is merely requested, you have options. Banks deliberately blur this line because customers who understand the difference make choices that reduce bank profitability. Here's what actually happens when income data flows into a bank's system. Credit limits are the most visible application. Banks use your reported income to determine how much credit to extend. Higher income typically produces higher limits, which sounds like a straightforward benefit, but higher limits enable greater spending, more accumulated debt, and substantially more interest paid over time. Banks understand that customers with larger credit lines tend to carry larger balances. A generous credit limit isn't a reward for your financial success. It's a longer leash, and they're counting on you to use it. Interest rate decisions represent a more hidden application of income data. Most people assume higher earners automatically receive better rates since they're statistically lower risk. Reality is more complicated. Banks analyze income alongside behavioral data to assess something beyond risk, your price sensitivity. High earners are frequently less likely to comparison shop or negotiate rates. The algorithm accounts for this. Affluent customers sometimes receive worse terms than their credit history warrants because the bank correctly predicts they won't bother switching providers. This practice even has an internal name: ability to pay pricing. The more you can comfortably afford, the more they'll charge, not because you're riskier, but because they can get away with it. Targeted marketing is perhaps the most relentless use of income information. Once you're categorized by income bracket, the offers change completely. Higher earners receive aggressive pitches for premium cards with steep annual fees, personal loans, investment products, and insurance packages. Lower income customers face a different version: fewer premium offers, but more predatory ones, high interest loans, and balance transfer promotions loaded with hidden costs. The targeting is precise because the underlying data is precise. There's something beyond these categories worth understanding. Income data doesn't expire after your application is approved. It persists in your file indefinitely, influencing decisions you'll never be directly notified about. An income figure you submitted years ago might still be shaping how the bank treats you today, factoring into decisions about credit limit adjustments, interest rate changes, or account closures during economic downturns. Now, when must you actually disclose income? Mortgage applications require verified income documentation. This is federally mandated and genuinely necessary. Auto loans typically require some form of income disclosure, though verification standards vary by lender. You should comply fully with these requirements. Credit card applications request income, but here's the critical detail. Issuers generally cannot and do not verify what you report. They have no access to your tax records without explicit permission. They cannot see your pay stubs. They rely entirely on your self-reported figure. Banks want this data desperately enough to ask for it every time, but not desperately enough to verify it. That asymmetry reveals quite a lot about how they're using it. Those periodic income update prompts appearing in your existing accounts? Completely optional. You have zero obligation to respond. To be explicit, I am absolutely not suggesting anyone misrepresent their income. Falsifying information on a credit application is fraud. It's illegal and genuinely harmful. What I am suggesting is that you recognize the significant difference between providing false information and simply declining to volunteer information that isn't required. Closing a pop-up is not deception, it's a privacy decision. Consider a straightforward example. Two customers share identical credit profiles, spending habits, and payment histories. One consistently updates their income when prompted, showing growth from $75,000 to $100,000 over 3 years. The other has never updated since the original application. The first customer now receives constant premium product marketing. Their credit limit has been raised multiple times. Algorithms see rising income as rising opportunity and respond accordingly. The second customer receives standard treatment, fewer offers, stable terms, less algorithmic attention. The bank simply has less fresh information to act on. Think about what happens during economic uncertainty. Banks review portfolios and make algorithmic decisions about which customers to prioritize and which to shed. Income data feeds directly into these decisions. A customer showing high income might retain their credit limit, or alternatively become a target for rate increases because ability to pay pricing suggests they'll tolerate worse terms. Customers with lower or outdated income figures may face different treatment entirely. When banks have less income data to work with, actual behavior, payment consistency, utilization rates, account tenure becomes more influential. Actions you control speak louder than a number you entered in a form. Banks have also designed their systems to prioritize fresh income data specifically. Stale figures trigger fewer algorithmic responses because outdated information is less predictive. Every time you update your income, you essentially reset your profile. The system reclassifies you, and optimization efforts intensify again. Declining to update introduces uncertainty into their models, and uncertainty generally produces more conservative, less aggressive treatment. There are absolutely situations where disclosing updated income serves your interests. If you genuinely want a higher credit limit and your income supports the request, provide the information intentionally. If a loan application benefits from demonstrating income growth, disclose it strategically. The point isn't blanket refusal. It's making deliberate choices rather than reflexively filling out every form placed in front of you. Financial institutions have trained us to feel obligated when asked for information. The official-looking form, the urgent language, the implied requirement, it's all constructed to maximize data collection from customers who don't realize they're making a voluntary choice. The first time you close one of those income update prompts without responding, you might feel mildly anxious. Nothing will happen. Your account will function normally. The bank will ask again in a few months. You'll close that one too. Eventually, you'll recognize how much of routine banking involves theater designed to manufacture compliance. Some practical guidance going forward. For new credit applications, provide income since it's effectively required for approval. If your income varies, you aren't obligated to report your highest earning period. Report accurately, but don't volunteer beyond what's necessary. For update requests on existing accounts, close the prompt unless you're specifically pursuing something that requires it. For credit limit increases, decide first whether you actually want the increase before providing income data to enable it. For required loan documentation, provide exactly what's requested and ask clarifying questions before submitting anything beyond stated requirements. The broader principle extends beyond banking. Any institution framing data collection as serving you better is primarily serving itself. Data minimization is a legitimate, rational approach to these relationships. Provide what's genuinely required. Decline what's optional. Recognize that information you share will be analyzed and used in ways you'll never fully see. Banks provide genuinely valuable services. Credit and lending enable economic participation that benefits everyone, but they are also profit-maximizing institutions that treat customer information as a resource to be leveraged. Recognizing this doesn't require cynicism. It requires honest awareness of how the relationship actually operates. The next time an income update prompt appears on your screen, you'll understand exactly what's being requested and why. Fresh data for algorithms designed to optimize their revenue from your account. Close the pop-up. Let your payment history and financial behavior represent you instead. That's the data that actually reflects who you are as a customer, and unlike a number typed into a form, you've already provided it through every transaction you've ever made.